That term macroeconomics, it applies the study of relationship between particularly broad economic aggregates. Again, he pointed out that broad aggregates. This all comes just now, as I said, total output, national income, GDP, inflation, unemployment, employment rate. Okay, this all the aggregates such as employment and income and population according to RJDLN. So coming to the nature and the scope of macroeconomics. Okay, the scope of macroeconomics is a wider, we can say that, because the theory of national income, the theory of employment, theory of distribution, economic development, international trade, money and banking, no business sectors, all these fluctuations, the theory of general prices, price levels, okay, and which deals with the continuous rising in the price level. We call it as no, as we know that last time we discussed, it is nothing but inflation. So here the macroeconomic studies increase income inequalities in distribution of income and wealth. The common man injured by the inflation, deflation in the opposite of inflation. It studies general price level automatically comes down continuously. Output and employment levels that maybe comes down or decreases drastically, right? So macroeconomics provides the explanation, provides the information. What are the occurrences? Why it is happened? Inflation and deflation. It studies. So the macroeconomics, it studies the theory of income, employment opportunities, theory of general price levels, nothing but inflation, economic growth and development. It relates to the distribution. It relates to it shows the share of factors of production, where factors land, labor, capital, and factors of production. And the theory of consumption, theory of investment, how this fluctuates. We call it as business cycle. Last time also we discussed. So we are talking about theories of income and employment. This macroeconomics, it deals with the aggregates of demand and aggregates of supply that determines the equilibrium level of income and employment in the economy. The level of, when we observe, the aggregate demand determines by the income and employment. Okay, so macroeconomics is it deals with the problems. What are the problems under the unemployment due to lack of aggregate demand? Moreover, it economic fluctuations and business cycles. Why there is unemployment? When there is no demand for the goods, the firms, they don't want to produce goods, automatically they decrease the employment or employees. They remove, right? So automatically unemployment will increase. It studies the macroeconomics. It studies the general price level and the inflation. It studies about the price levels in the economy and what are the problems comes under the inflation, what are the reasons, how to overcome from the inflation also it explains. The macroeconomics, it studies about the economic growth and development, economic growth and development, where macroeconomics, as I said, deals with economic growth and development. What does it mean? It studies various factors. It studies the factors contributes related to the growth and development. So macroeconomics studies about the economic growth and development. Theories of distribution also, where, as I said, various factors of productions are there. So their relative share to the total production and total national income, it studies. The theories of business cycle also studies the macroeconomics, comes under the macroeconomics. As I said, it studies the aggregates, broad areas it studies. So that is the reason why included inflation, growth and development, theory of distribution, business cycle, input and output, all comes under the no macroeconomic. So macroeconomic studies or analysis the causes of fluctuations, why boom prosperity, again why recession, depreciation, recovery. Why? What are the reasons behind that? This macroeconomics explains all. Okay. Coming to the distinguish between microeconomics and macroeconomics. What are the major differences? So when we observe this difference, yes, there is a difference between these two. Microeconomics or macroeconomics, it considers itself the variables at the aggregate value of the output of the economy with the extent of its resources which are employed, the size of the output economy, okay, and which its resources are employed with the size of national income, the general price levels. It studies it related to the macroeconomics. Where microeconomics, on the other hand, it studies the total output among the industries, total output among the industries are products and the firms, the allocation of resources among these firms, among the competitors, it explains the micro. It considers the problems, income distribution. It relates to the particularly goods and services. Individuals, demand and supply, it studies this microeconomics. Still, when we observe, there is a variation between these two, micro and macroeconomics. We need to stress on macro because we are studying macroeconomics. So when we talk about microeconomics, it deals with the individuals of product, as I said. Individuals, it may be firm or group of firms or households. It related to wages, okay, prices. This comes under the microeconomics. Coming to the macro, as a broad, it deals with the aggregates of like uh, national income, national output, price levels, employment levels, inflation, okay, FDI, foreign direct investment. These variables comes under the macroeconomic variable, macroeconomic study. Coming to the microeconomics, it studies a particular market segment of the economy, whereas macroeconomics studies as a whole, it covers several markets. Micro, it is studying as an individually, but macro, altogether we are studying. Macroeconomics covers under several markets, segments. Okay, where micro, it applies internal usages, environmental and external usages, which comes under the macro. Micro only internal issues it is study, where we are talking about macro external issues. External, It may be, environmental issues, and it comes under the macroeconomic. As we know that the problems, if there is a, pollution increases, environmental pollutions, what will happen? That, negatively impacting on the environment, right? So this type of issues also the macroeconomic studies. Coming to the microeconomics, it covers like, how the price of a particular commodity, how it is affecting the demand and quantity which is supplied, and where macroeconomics, it comes under the, like unemployment, monetary policies, fiscal policies, poverty, trade. Again, trade between the two countries, between the countries, we call international trade. This comes under the uh, macroeconomics, right? And also, microeconomics determine the price of a particular commodity along with the prices, complementary and substitute goods. Whereas macroeconomics, it maintains the general price level. General price level. So, while analyzing the microeconomics, it takes bottom-up approach, whereas, when we are talking about the macroeconomics, top-down approach is considered under the macroeconomics. Coming to the importance of macroeconomics, when we observe, there are, it is helpful to understand the economy as a whole, because as I said, it studies the economy as a whole. So it is helpful for understanding the functions of the, economic system, easy to understand. And also it helps to understand the income and employment. Macroeconomics explains what are the forces or, factors that are determine the level of employment. What factors are influencing the employment opportunities that studies and output in the economy. Okay, so it explains the understanding the income and employment opportunities. General price level. Macroeconomics analysis, as I said, the general price level, how determined, and what are the importance of various factors which influence the general price levels. That is more important. If the price levels are increasing, means that causes for the inflation, as I said. So what are the factors are influencing to increase that particular prices, general prices? At the same time, what are the measures to control that prices? This macroeconomics can analyze. Okay. And also accelerated the economic growth. Accelerate the economic growth. What does it mean? It helps to formulate the policies. What are the policies to be, implement to achieve long run growth in the economy? So this it studies about the accelerate the economic growth, and also understanding the business cycles. Understanding the business cycles. So it helps to formulate the policies for controlling the business cycle and inflation and deflation. It is more important. It studies about the international trade. As we know, what will happen if we import more and more commodities from the other countries? If we export our commodities or goods and services to other countries, what will happen? Yes, if exports are more, imports are less, then it is good sign for the international trade. If we import more and commodities, then it is bad impact on the economy, right? So what are the various aspects particularly in international trade and goods and services. It impacts on balance of payments. If imports more, there is a disequilibrium in the balance of payment. If exports are more, there may be a chance to get surplus in the balance of payments. Okay, so international trade is very important to affect the exchange rate and balance of payments. Another thing, if our exports are more, our currency will be appreciated. If the country imports more and more goods and services, rupee value will be depreciate. That is also important to study. So understanding the national income, okay. So here, the macroeconomics particularly, it explains the the level of output, composition, per capita income, standard of living, which comes under the it studies about the national income. Understanding the general unemployment, as we know, it explains the causes of cyclical unemployment and high unemployment that leads to remedies to control them. Macroeconomic policy is also very important. Generally, when we are talking about the macroeconomic policies, after performance of the economy, we come to know the policies. We know that monetary policy and fiscal policies, which are playing vital role in macroeconomic analysis, these policies. And also global economic system, macroeconomic analysis, it emphasizes the nation's economy as a part of a global economy. We can easily compare with whether our economy is growing or not, comparing with the other nations. Saving and investment, this is more important. This macroeconomics, it discusses the importance of savings and investments in the economy. Okay, macroeconomics also deals. And it understands the behavior of individuals, units. Macroeconomics, it is a imperative to understand the behavior of individuals in the economy. When we analyze as a whole, we can observe an average for the individual units of the economy, right? This is the importance of macroeconomics. Coming to the limitations of macroeconomics, there are still various limitations are there, drawbacks are there from the macroeconomic side. One of the important uh, limitation of macroeconomics is that ignores the welfare of the individuals, ignores the welfare of the individuals. So generally, if the national savings increases, the cost of individuals' welfare, it is not considered as a society or as a wise policy. So that individuals ignore altogether while analyzing the macroeconomics. Not only that, another limitation, aggregates are considered as a homogeneous. Aggregates are treated as a homogeneous. What does it mean? So macroeconomic analysis, as I said, aggregates are homogeneous. But what will happen when it look into the internal consumption? If the wages of the teachers fall, the wages of the doctors may be rise. The average wage may remain in the same. When we consider as a homogeneous, right? So that is also one of the drawback. And aggregate variables, it is not necessary to consider all the variables, all the aggregate variables which are not important. For instance, when we observe national income is the total income of individuals, right? If national income in the country goes up, it is not necessary that income of the individuals in the economy also increase. It is absolutely wrong because the country like India, our national income is increasing, population also increasing, but average individual income or per capita income, what will happen? It comes down, it decreases, right? That is also one of the drawback. And defects of macroeconomic models. The macroeconomic analysis are models that are designed mostly for the developed countries in the world. So how it is applicable for the underdeveloped countries or developing countries like India? So the developing countries face different economic realities. So that what will happen? Do not benefit much for the developed countries or underdeveloped countries, right? So there is a huge differentiation between these two. The another important thing is that, statistical and conceptual difficulties. Statistical and conceptual difficulties. As we know, measurement of macroeconomic concepts involves number of statistical and conceptual difficulties. It is very difficult to measure the macroeconomic variables sometimes. As employment we can, GDP we can, inflation we can measure in terms of numerical numbers. Some variables we may not be, some qualitative variables also we may not measure in terms of numerical numbers. So it is very difficult for this statistical analysis. Okay. The another one is national income. Another topic, national income. As we know that national income simply, according to when we define national income, the labor and capital of a country that acting on its natural resources to produce annually certain net aggregates of commodities that we call it as national income according to Marshall. There are various definitions are there. Kuznets, Simon Kuznets also has given one definition related to national income. National income is nothing but, it is the net output of commodities. National income related to net output of commodities and services that flowing during a particular period of time, that is, over a period of time that is 1 year. Within the 1 year, output of commodities and services. If we calculate, we add together, then that is national income. So there are different, again, National Sample Survey also has given one definition. Money measures the net aggregates of all commodities and services that occurring the inhabitations of the commodity during a specific time period as a national income. That specific time period is 1 year. We call it as national income. When we are talking about the components of national income, there are some important determinants, components of national income, such as natural resources, level of employment of labor, physical and human capital availability in the country, efficient of innovative skills and organizations, social and economic infrastructure available to the country. These all are the factors that are determined the national income, right? So the major concepts when we are talking about the concepts of national income, you know, gross national product, GNP, net national product, national income at factor cost, which also comes the concept personal income, disposable income, and per capita income of the people. So when we are talking about the gross national product, GNP, gross national product is the total measure of flow of goods and services in the market, particularly calculating with current time period during the current production during the year. It includes net income from the abroad. So the GNP includes the consumption, we express with C, investment with I, government expenditure with G, net foreign trade, exports and imports, the variation of exports and import, that also we express. When it exports, we express with X, and imports we measure with, or we denote with M. So consumption, here the total amount of goods and services which are purchased by the consumers to satisfy immediate wants of the people, that is consumption included. Investment, the gross private investment in capital consisting fixed capital formation, gross fixed capital formation, residence construction and inventories of finishing and unfinished goods expressed with I because it is investment. Government expenditure, as I said, G. Goods and services which are produced by the government included in the GNP. Net foreign trade also, the variation, the difference between the exports, the value of exports and imports and services we add here. And another one is GDP, gross domestic product. When we take as a total volume of output of goods and services in the economy without adding net factor income, which is received from the abroad, and the total obtained, we call it as gross domestic product. Okay, so here in GDP, we are not including uh, the income which is received from the abroad. We are not include at all. So here in GDP, consumption, investment, and government expenditure will. It is clear that the foreign income, export and import, which is deducted from the GNP, then will get automatically the GDP. That is GDP. And the net national income or net national product. In the process of GNP, the capital, goods and employees which are worked out, the amount automatically declines, right? So the value of capital goods due to wear and tear, when we use machinery in the industries over a period of time, that becomes, wear and tear, that we call it as depreciation. Okay, this depreciation we need to deduct from the GNP. Okay, from the GNP, when we deduct this wear and tear, we call it as depreciation, then we get NNP, net national product. Okay, and NDP, net domestic product, when we NDP will get, we need to deduct this depreciation from the GDP. Okay, then we'll get NDP, we will get in this NDP, personal consumption expenditure and goods and services, that is C. Net domestic private investment, that is I. Government expenditure and goods and services, that is G, we include. national income at factor cost. When we observe this, the national income at factor cost means the sum of all the income which is earned by the resource of suppliers for their contribution to the land, labor, capital, and entrepreneurs. Factors of productions are earning some amount of money for producing the goods and services or to involving the producing goods and services. So labor, land, capital, and entrepreneurs, these are the factors. So the land maybe get rent, labor maybe get, may get wages, capital for interest they get, and entrepreneur, they'll get profit or loss. These are the factors of production. So the difference between national income and factor cost, NNP at market prices are due to the indirect cost and subsidies which are, pushes or deduct the NNP at market prices. So in the national income at factor cost, we'll get NNP minus indirect taxes plus subsidies we need to add in this NNP. Personal income, uh, it is total income earned by the individuals or received by the individuals of the country from different sources before payment of, direct in the direct taxes in a particular area. Okay. So personal income is nothing but how much income received by the individuals from various sources. That is, personal income. In this personal income, from the national income, we need to subtract the social security contributions, corporate income taxes also deduct, undistributed corporate profit also we need to deduct. Transfer payments we have to add here. Transfer payments we need to add. Coming to the another one is disposable income. Another one is disposable income. As we know that, disposable is nothing but, actual income. Okay. So it arrives as a disposable income for the individuals after paying the income tax. What does it mean? Personal income, as I said, individuals are receiving the income from various sources, that is personal income. What is disposable income? From this personal income, these people maybe, pay some kind of taxes, that is direct tax for receiving this income, right? So that taxes he need to pay. After paying, some amount he is having, right? That income, we call it as, actual income. That income, we call it as disposable income. That income, we call it as disposable income. Disposable income is nothing but personal income minus personal taxes. He has to pay direct tax from his income, right? So automatically he'll get disposable income. The another one is uh, per capita income. Another one is per capita income. Per capita income is, average income of the individuals of the country, of people of the country, particularly over a period of time, that is particularly in a year. We call it as, per capita income. So this concept refers to a measurement of income at current prices and constant prices we can calculate. In order to find the per capita income, okay, we can simply calculate the per capita income national income by total population. National income by total population will get average income received by the individuals. That is per capita income. Okay. So unfortunately, it is not reliable because every country, due to unequal distribution of national income, major portion it goes for the, as we know, rich people. Their income levels are very high. Rich section people, thus we can say that common man, they are lower per capita income than the rich people or rich section, right? So there is a huge differentiation between particularly developing countries or underdeveloped countries. These income inequalities are there. The another one, methods of estimating the national income. There are three.
సార్ ఇంపార్టెంట్ క్వశ్చన్స్ ఇస్తా అన్నారు కదా సార్.
ఇది ఒక్క టాపిక్ చెప్పి ఇద్దాం. లాస్ట్ 10 minutes లో ఇచ్చేస్తా.
ఓకే సార్.
ఎందుకంటే ఇది ఇంపార్టెంట్. మాక్సిమం ఇది లేకుండా మీకు క్వశ్చన్ పేపర్ ఉండదు. ఇప్పుడు డిస్కస్ చేసిన వాటిలో 2-3 క్వశ్చన్స్ వచ్చే ఛాన్సెస్ ఉన్నాయి. Methods of estimating national income. There are 3 methods are there. One is total outlay method. Okay. This also we call it as value added method. In this method particularly, we are adding all the final goods and services which are produced in the country, particularly during a particular year. We call it as total outlay or total output method. Okay. So all the major sectors in the economy, when we observe, further they subdivided into the number of subsectors. All the transport sector, again, this divided into roads, railways, waterways. Similarly, all the sectors, each and every sector divided into different minor sectors. In this manner, all the activities comes under this and calculate equal to the value of goods and services in the national product. Okay. So national income, here in this method, all the people, the wages received by the labor, salaries, rent, interest rate, distributed profit, undistributed profit, depreciation and mixed income, all comes under the national income. Labors are getting, land is getting through the rent, labors are getting through the wages, capital through the interest rate, organizations, they are getting profit or loss, right? So that comes under the output method. Second one is expenditure method. In this method, total income, generally, when we observe the word itself, it shows clearly expenditure. We are talking about as a whole, right? So the total expenditure incurred by the society in a particular year, that add together. That means we are including all the individuals as a whole. That includes personal consumption, expenditure, okay, net investment, government expenditures, all the goods and services and net foreign investment expenditures included here. So the expenditure incurred on the particularly the final goods and services we call as national income. All the expenditures incurred by the individuals we call as expenditure method. We calculated as a national income. So in this national income, with the help of expenditure method, we add all the expenditures of households or individuals, expenditures of the business households, okay, or farms or industries, and expenditure of government we include in the expenditure method, then we'll get the national income. Okay. So anyhow, I'll give you some important questions. You focus on that. Okay.
Yes, sir.
Importance of national income. Scope of national income.
Yes, sir.
Sorry. First, the importance of macroeconomics. Importance of macroeconomics. Second, the scope of macroeconomics. Components of national income. కొంచెం స్పీడ్ అప్ చేసుకుంటూ రాయడము. Components of national income.
Yes, sir.
Circular flow of four sector model in the economy.
Circular flow of.
Circular flow of income in four sector model.
Yes, sir.
Ancient theory of income and employment.
Yes, sir.
Determinants of consumption.
Yes, sir.
Explain the Say's law. Say's law of market. SAY apostrophe S. JB Say. Okay, na? Explain the JB Say law of markets.
Yes, sir.
Right. Principles of effective demand.
Yes, sir.
Determinants of consumption అయిపోయింది కదా?
అవును సార్.
అయిపోయింది, రైట్. Relation between MPC and APC.
Yes, sir.
ఎన్నైనాయి?
11 అయినాయి సార్.
11 questions. Types of investment. Determinants of investment. Factors affecting the investment.
Yes, sir.
Multiplier. Accelerator. ఈ షార్ట్ కూడా ఇస్తున్నాయి.
మల్టీప్లేయర్ యాక్సిలేటర్ సార్.
యాక్సిలరేటర్.
ఓకే.
Questions. Measures of money supply in India. Functions of money. Classification of money. ఈ మూడు స్టార్ మార్క్ పెట్టుకోండి. ఫంక్షన్స్, క్లాసిఫికేషన్, మెజర్స్ ఆఫ్ మనీ సప్లై ఇన్ ఇండియా. మూడిట్లో ఖచ్చితంగా ఒకటి లేదా రెండు వచ్చే అవకాశం ఉంది.
Yes, sir. 89 అయ్యి సార్.
ఇంకొక 3-4 ఇద్దాము. చూస్తున్నా, ఎందుకంటే మిగతా సిలబస్ కూడా కవర్ చేయాలి కదా అన్నట్టుగా చూస్తుంది. ఈజీగా ఉండేటివి బిజినెస్ సైకిల్ మనం డిస్కస్ చేసినాము లాస్ట్ టైం ఉన్నా. పేజెస్ ఆఫ్ ట్రేడ్ సైకిల్, measures to control trade cycles, features of trade cycles, features of trade cycle. ఒకటే క్వశ్చన్ ఇక లాస్ట్ది. ఇన్ఫ్లేషన్ కామా, పెద్దగా ఇస్తున్నా. ఇన్ఫ్లేషన్, టైప్స్ ఆఫ్ ఇన్ఫ్లేషన్ అని రాసుకో. టైప్స్ ఆఫ్ ఇన్ఫ్లేషన్ కామా, కాజెస్ ఆఫ్ ఇన్ఫ్లేషన్. అంటే ఎట్లైనా అడగొచ్చు. ఇది ఒక్కటి చూసుకుంటే ఒక్కోసారి కాజెస్ అడుగుతాడు, ఒక్కోసారి టైప్స్ అడుగుతాడు. అట్లా టైప్స్ కామా కాజెస్, ఎఫెక్ట్స్ ఆఫ్ ఇన్ఫ్లేషన్ కామా ఎఫెక్ట్స్, మెజర్స్ టు అండ్ పెట్టి మెజర్స్ టు కంట్రోల్ ఇన్ఫ్లేషన్. ఈ పెద్ద క్వశ్చన్ చదువుకుంటే 2 క్వశ్చన్స్ వస్తాయి ఇందులోనే, ఇన్ఫ్లేషన్ లో. సో నేను క్లోజ్ చేస్తున్నా. అమ్మా, నీ వాయిస్ బ్రేక్
3 క్లాసెస్ ఉన్నాయి సార్ మనకి.
ఉన్నాయి ఉన్నాయి ఉన్నాయి. మనం
ఇంకా ఉన్నాయి సార్.
ఉండదు, మనం డిస్కస్ చేస్తాం. నో ప్రాబ్లం, నో ప్రాబ్లం.
ఓకే
We will discuss. ఓకేనా?
ఓకే సార్.
Right, I'm going to
ఓకే
put. Right, right.
ఓకే.